Let's now shift our focus to India. Adani Power, one of the firms backed by Gautam Adani, has given up on plans to acquire D.B Power. Adani Power signed a deal to acquire D.B Power's coal-fired plant in Chhattisgarh. The coal-fired plant in Chhattisgarh, that was last August. The deal was valued at $450 million. The Adani Group had postponed to buy D.B Power previously, but the deal was called off on Thursday. More than 3 weeks after Hindenburg research's damning allegations, the fallout of Hindenburg's charges still impacting Adani's empire. The charges have forced the billionaire to review his capital expenditure plans. For Adani, the era of debt-fueled acquisition spree seems to be over. If Adani Power's stock market filing on Wednesday is an indicator, the firm has shelved its plan to take over a coal-fired power plant. Which brings us to a very important question. Is an overhaul of Adani's business strategy underway? And to answer that, let's try to understand how Adani raised money from the market. Adani's listed firms had accrued a net debt of over $24 billion till last September. That is according to a statement this week. In the last 2 years, the value of Adani firm stocks rose by 819%. According to Hindenburg, the exponential rise in Adani firm's market cap was due to stock market manipulation. Adani used offshore shell companies linked to his firms to inflate the stock prices, and the same shares were then pledged to investors to raise debt. Debt used for capital expenditure and further expansion. But now that Hindenburg has called out Adani's strategy and sparked the biggest stock market rout in Indian history, Hindenburg's report has also eroded Adani's personal fortune. He is now the world's 24th richest person. He is no longer the richest Indian anymore. But what does Adani do to win back investor confidence then? He pays back some of the accrued debt and revises the capital expenditure plans. Here's what the conglomerate has done towards this end. It has scrapped a fully subscribed FPO citing market volatility. It has paid back $1.1 billion of debt backed by the company's shares. The conglomerate will also be paying off a $500 million loan payment due next month. Adani Ports and SEZ will halve its capex in 2024. And how exactly are the markets reacting to these announcements? Surprisingly, the stock prices of some of the Adani firms seem to have stabilized. Have a look at the Adani firm's stock prices at the end of trading today. Most of the listed stocks are in the green, but they are still yet to hit the pre-Hindenburg levels. And that would take some time and work if Adani firms will ever touch that mark again. Meanwhile, Adani's next moves are being keenly watched around the world. In a sign of some relief for the Indian conglomerate, MSCI saying it will postpone implementation of the updates for 2 of Adani firms to the May benchmark review. Last week, MSCI had slashed the weightage of 4 of Adani firms. MSCI is an influential global index provider. It is followed by global investors, and they are key to Adani's recovery plans. A significant chunk of Adani's borrowings came from investors outside India. Deutsche Bank, Standard Chartered, Barclays, they were all part of Adani's debt-fueled growth story. There were several Indian entities as well which have lent to Adani. State Bank of India, Life Insurance Corporation of India, ICICI Bank. But for Adani, a big stumbling block is meeting his debt obligations. There has been an exponential slump in the market cap of his firms and his personal fortune. What's more, the debt repayments by Adani so far, they don't even constitute 10% of what companies backed him actually owe. WION now available in your country. Download the app now. Get all the news on the move.